It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Lizzie Burden in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The dollar slips and yields rise across the curve after China urged its banks to trim their Treasury holdings. Meanwhile, the yen's also on the move, strengthening against the dollar following Prime Minister Takaichi's landslide victory. And all of that in a busy week for data, with a delayed US jobs report and a fresh inflation print. Well, happy Monday, everybody. We saw the gains on Wall Street on Friday carrying into the new week. We've already seen a firmly risk-on mood in the Asian and European sessions, which leaves futures stateside actually the laggards globally. You can see here we are in the red across the screen now. And meanwhile, as I say, a massive week for the bond market, not to mention the politics. Sanai Takaichi knocking it out of the park in Japan, UK Keir Starmer hanging on for his political life, and a raft of US eco data on the docket. Already we have, as you can see, Treasury yields up across the curve, led by the long end after China urged banks to curb their exposure to US government bonds. But let's dive into the single stock story now. For more, we've got Abu Omar.
Hi, Lizzie. Yes, we are watching hims and hers very closely today. In the pre-market, you can see it's 14% down. And that's on the back of a story about them pulling back on selling the copycat Wegovy pill. That was after the FDA said that it was cracking down on copycat pills. The story on the healthcare side is with Eli Lilly as well. But that's a little bit different. The story on Eli Lilly is that it's teaming up with a Chinese biotech firm, $350 million deal there to tackle medicine when it comes to cancer. Novo Nordisk in the European Open was up more than 8%, but that is similar to the hims and hers story because, Novo is the OG Wegovy pill manufacturer. Flip the board and we can see that Kroger is doing well this morning, and that's on the back of a new CEO announcement, ex-Walmart chief. The stock is doing pretty well on that news this morning. And then finally, we've got Nexen, small cap in the S&P. But what we know about this is that there is a little bit of M&A activity here in the morning. We know that Sky reported this morning that a suitor is exploring an offer for at least $10 a share in Nexen. So stock is reacting pretty positively this morning, Lizzie, up 16.6% in the pre-market. Lizzie.
Great stuff. We'll have you back later on this hour. And coming up on the brief, the dollar, the yen, the sterling moves. We're going to discuss all of them with Jane Foley of Rabobank. And live from the African Mining Indaba conference, we'll be talking to Robert Friedland, founder of Ivanhoe Mines as well. But let's start in the US. Treasury yields rising as China is said to have flagged banks its concerns around US debt from volatility and concentration. Bloomberg's Ven Ram joins us now for more. Ven, why do you think that China's issued this directive to banks to trim their exposure to Treasuries now?
Morning, Lizzie. It's part of an ongoing saga of what China has been trying to maneuver. Well, China wants to steer away from its dominance on the US, whether it's in investments or whether it's in industry. And what we are seeing is the former one, obviously. And it's an interesting story. It's a big ship turning around, but it's going to take, it will take place over time, and the moves will be gradual. If you look at China's holdings of treasuries, they were about 1.3 trillion about a dozen years ago. Now that's come off a lot, to the extent that their treasury holdings are only about 682 billion. So that's already less than half of what they had about 10, 12 years ago. And what the story talked about today was China directing its banks. It's not the state holdings, but the holdings held by banks, which are much less consequential to their entire portfolio. So I think that the reaction in treasuries has been muted, but it's a big story that we need to be worried about, which is one of China circling and diversifying away from treasuries, and that will have an impact on treasuries over the longer term.
Yeah, it's not just Treasury yields up, of course, it's also European bond yields. Ven, do you think that's going to last?
Sorry, can you come again?
Do you think it's going to last, Ven, that we've also got European bond yields higher, as well as Treasury yields off the back of this?
Well, I think that, it is going to weigh on long-dated treasuries. If you have seen the 30-year yield, we have not been moving meaningfully below or above 490, but I think that the risks are to the upside in terms of yields. But if you look at the German narrative, Lizzie, I think it's a different one because, if they are going to diversify away from US, where are they going to go? They can't go to Japan because yields are surging and they will probably face losses in the coming years as the Bank of Japan normalizes policy. And they will probably look to diversify into the European Union, which is good for German bonds because, here is an economy where yields are going to be stable, where certainly the European Central Bank is not looking to move on rates in the short term. So I think that Germany is a natural home for China's holdings, and I think that bonds will benefit from this move.
And then President Trump's Fed chair pick, Kevin Warsh, of course, has called for a new Fed Treasury accord. What's that likely to entail?
Well, on the face of it, given his pronouncements as Fed governor in his previous life, he would imagine that he's arguing, he's very keen on shrinking the Fed's balance sheet. But today's story kind of suggests that, he may be willing to collude with the Treasuries. But if he does that, the Treasury is unlikely to want a shrinking of the balance sheet, because that will imply tightening of financial conditions, which is not what the Treasury wants. They want lower yields. So it is going to be interesting to see how Warsh behaves as the Fed chair, as opposed to what he's been saying all along. So I think that, it's an open question to what extent he will be willing to collaborate with the Treasuries on this.
OK, Ven, thank you so much. That's Ven Ram. Well, over in Japan, the ruling Liberal Democratic Party scoring a historic win in the snap election over the weekend. Bloomberg's Paul Jackson joins us now for more from Tokyo. Paul, a slam dunk for Takaichi, but the question in markets surely has to be, how fast is she going to get on with her fiscal agenda?
Well, that's a good question. She's been quite reluctant to firmly commit to a lowering of the sales tax to zero for 2 years. This is one of the campaign promises. She's been very careful with her language on that. She's talking about a lot of differences among other parties about how tax policy should be carried out and the need to reach a consensus in Parliament on this. She's talking about reaching a midterm conclusion on this around about the summer. That's just from her press conference now. And I think for investors, this is the key point. I think the sales tax has become the focus of concerns about, is the Takaichi administration going to fess up? Is it going to give the details about how it's going to fund its spending plans down the line? And without more clarity about how it's going to summon up the cash to pay for measures like a tax cut or aggressive investment in certain key industries, I think markets are still going to remain on edge, even though we saw in the reaction today in markets a very positive move in stocks, as you would expect. And essentially in the yen and bond markets, a kind of reasonably calm response. And with such a landslide victory, there are a lot of positives just from the fact that we will have stable government in Japan over the coming years.
Yeah, the yen actually strengthening against the dollar this morning. How do you interpret that? How do you interpret the comments from the currency czar?
Hey, I think that could be the calm before the storm. It's kind of like a honeymoon response to the election landslide. I think we should be wary of concluding that this means she's out of the woods and that's the end of the pressure on the yen. I think still there are many factors in play that suggest there could be another move down towards the 160s. And I think at this point, that would have to end up in some kind of intervention. But let's see, over the coming days, I think we'll get a better idea as to how markets are going to absorb and digest this result.
OK, Paul, thanks for the update. Looking at the yen at 156 per dollar right now. That's Paul Jackson in Tokyo. Thank you. Well, here in the UK, Prime Minister Starmer's future is in the balance as Chief of Staff Morgan McSweeney has resigned over the appointment of Peter Mandelson as ambassador to Washington. I was speaking to the Reform UK Party chairman Richard Tice earlier on about Starmer's premiership. Just take a listen.
Morgan McSweeney's resignation, it's just the beginning, because over the next few weeks, what is going to be released via the Intelligence and Security Committee is the depth of messages and emails that have gone on in and around Number 10 in the run-up to the appointment of Peter Mandelson and subsequently, and also his involvement at the heart of this Labour government in the run-up to the election and afterwards. And I think as those come out, if the Prime Minister is still Prime Minister at that time, that will effectively finish him off.
Let's bring in Rosa Prince of Bloomberg Opinion for more. Rosa, we're looking at gilt yields higher across the curve, only a touch, but nonetheless. Starmer, of course, will have hoped that McSweeney's resignation would draw a line under the Mandelson fiasco. Has it actually done the opposite?
I don't think it's moved things very much forward, actually. I mean, it's a big deal. Morgan McSweeney was integral to Keir Starmer's premiership. It's very strange for him to be in office without McSweeney at his side. But I don't think it's either done much to shore Starmer up or to push him over the edge. I think he still remains a Prime Minister in crisis whose opponents seem unable to give him that final shove and actually get him out of Downing Street, which is sort of a lose-lose for both sides.
So do you think that it's more likely he would go after the May elections or even further out than that?
Yeah, I mean, I think that a lot of Labour MPs have wanted Keir Starmer gone for quite some time. This crisis is more acute than everything that's gone before, just because it's such a horrific scandal, really unpleasant reports we've heard about what Mandelson was up to with Epstein. It's not good at all for the image of the Prime Minister. But they keep coming back to this same issue, which is that they don't have any obvious candidate there to replace him, and they don't have any very easily pulled lever to actually trigger a contest and get him out. So he kind of clings on by default. One suggestion is that he might kind of have enough himself and think, look, I've got so little support, I don't want to do this anymore. The fact that he's actually sacrificed his closest ally in government sort of gives the suggestion that he's not ready to do that, because what would be the point of doing that if you're going to go anyway? So, yes, I think, unfortunately, he clings on. I say unfortunately because I don't think that's good for our economy, for our country, and Britain really needs a stable government at the moment, and we haven't got that.
So you say one of the reasons that Starmer is clinging on is because there isn't a challenger ready. Of course, there are runners and riders lists going around. I wonder what you think those runners and riders would make for them, the impact of them for the markets.
Yeah, I mean, if he does fall, then there will be a battle for the soul of the Labour Party. And there are some that are more palatable than others. We have already seen wobbles in the markets in the past when some of these contenders look like they might be in pole position. Someone like Angela Rayner, for example, the former Deputy Prime Minister who's on the left of the party. You've also got a figure like Andy Burnham, not an MP at the moment, so couldn't run in this contest. But if an opening came about and he was able to get into Parliament, again, he has said we should stop being obsessed with the bond markets. So I think the bond markets wouldn't take too kindly to him, probably. I mean, I think probably the most interesting position, if Starmer did go, would be what a new Prime Minister would do about the Treasury and who they would put in as Chancellor. I think if even one of these quite left-leaning candidates put someone seen as sensible, perhaps Darren Jones or Pat McFadden, then things would calm down. So I think that's the real thing to watch once we get into a post-Starmer scenario.
I do wonder whether Burnham really means we shouldn't be in hock to the bond market. Andy, if you're listening, you can come and tell us. But Bloomberg's Rosa Prince, thank you very much for your analysis. Now, to some other top stories trending on the terminal this morning. Goldman-led traders say US stocks could face more selling this week from trend following algorithmic funds. They warn that the decline could trigger about $33 billion of selling this week. And if the S&P 500 falls below 6,707, it could unlock unlock up to $80 billion of additional systematic selling over the next month. Elsewhere, UniCredit plans to return about $59 billion to investors through 2030. The CEO, Andrea Orcel, vows to further improve profitability and capital generation over the next 5 years. The bank will pay out 80% of profit in a mix of cash dividends and share buybacks as ordinary distribution. And a Hong Kong court sentenced former media mogul Jimmy Lai to 20 years in prison for collusion and sedition charges. The sentence is the heaviest penalty yet meted out under a 2020 Beijing-imposed national security law. Lai has 28 days to file an appeal. The pro-democracy activist family and supporters condemned the sentence. Well, coming up, easing US Middle East tensions, bringing oil down. More on that story next. This is Bloomberg. This is Bloomberg Brief. I'm Lizzie Burden in London. Well, oil is falling as easing tensions in the Middle East reduce concerns over supply risks. That's as Israeli Prime Minister Netanyahu is planning to visit Washington on Wednesday to speak to President Trump. Joining us now is Bloomberg's Honor Ant. Honor, good morning. Just talk us through what was actually achieved in Oman.
Well, after the brief mediated talks between Iran and the US in Oman last week on Friday, both countries have come out and said those meetings provided the basis for a continuation of talks, which we expect will happen later this week, again in the region. The Iranians have basically said that the talks were a step in the right direction, were a step forward, whereas in the US, we have seen that President Donald Trump said that from the talks that their key takeaway was that Iran wants a deal, and Trump's own words, they want it very badly. Perhaps the most telling bit coming out of the US is the fact that Donald Trump said after Friday's mediated talks that they could be okay with a somewhat more limited deal with Iranians that focuses on the nuclear enrichment issue alone. And that is very important because we have seen opposition from that proposition, especially from Israel, since these talks have been made public about 10 days ago, where the Israeli authorities have been pushing for a more sweeping deal between the US and Iran that would focus on not only nuclear enrichment issue, but other issues such as the militia and the ballistic missile capabilities as well, Lizzie.
OK, so you think that pressure is going to be the main thrust of Netanyahu's message to Trump when he visits the White House this week?
Absolutely. The Wednesday meeting, the Wednesday Oval Office meeting between the two leaders are expected to be mainly about this. Both Netanyahu and members of his government have made it clear from the get-go that they would like the US to push Tehran in their negotiations to seek a deal that is not only about nuclear enrichment, but the deal, any possible deal, should A, limit the ballistic missile capabilities of Iran and its efforts to develop more of them, and B, it should also force the Islamic Republic to end its support for various militant groups in the Middle East, the so-called Iran Axis. As you know, all of those groups are openly hostile to Israel. So for Israel, any agreement between the US and Iran must include clauses that would force Iran to diminish, if not completely stop, its support for these groups. But obviously, that's a very tall order. It's a big ask. And we have seen no evidence so far, we have seen no evidence that Iran might be willing to agree to anything agree to a deal that would look at anything other than the nuclear enrichment issue, including the proxy militia.
OK. Honor, thank you so much. That's Bloomberg's Honor Ant as we look at Brent at $67 a barrel. Well, coming up on Bloomberg Brief, President Trump's clampdown on immigration extends to the UK. More on that and a look at what else is making headlines in your front page news next. This is Bloomberg. This is Bloomberg Brief. I'm Lizzie Burden in London. Time now for your front page news. First up, on the Washington Post, President Donald Trump planning to keep Democrats out of a traditionally bipartisan White House gathering of governors. According to the governor's offices, at least 2 Democrats, Maryland Governor Wes Moore and Colorado Governor Jared Polis, were uninvited to a White House dinner. Next up, let's take a look at the Financial Times. The US Embassy in London denying visas to top-level business executives over minor criminal offences. According to immigration lawyers and visa consultants, people looking to travel to the US on tourist and business visas who have petty offences on their records, some dating back as far as the 1970s, are frequently turned down. And let's have a look at the Wall Street Journal as well. They're leading on the grocery giant Kroger, planning to hire ex-Walmart executive Greg Foran as its next CEO. Kroger, the biggest grocer in the US, of course, by sales after Walmart, has been searching for a permanent leader for almost a year after the departure of longtime CEO Rodney McMullen for an undisclosed ethics violation. There are your front pages. Checking in on these markets, we've got futures stateside in the red after strength in the European and Asian sessions, dollar weakness on the flip side of yen strength, and the fact that China's urged banks to curb their exposure to US government bonds, and that pushing Treasury yields up as well. We'll discuss this next with Jane Foley of Rabobank. This is Bloomberg. 5:30 a.m. in New York City, 10:30 a.m. here in London. Good morning. I'm Lizzie Burden in for Vonnie Quinn with your Bloomberg Brief. Let's set you up for the day. The dollar slips and yields rise across the curve after China urged its banks to trim their Treasury holdings. Meanwhile, the yen's also on the move, strengthening against the dollar following Prime Minister Takaichi's landslide victory. And all of that ahead of a busy week in data, with a delayed US jobs report and a fresh inflation print on the docket. A very good morning if you're just joining us. Happy Monday. And those gains that we saw on Wall Street on Friday carried into a risk-on mood in the Asian and European sessions. But sadly, as you can see, not into the US futures picture. The mood rather more dour stateside. And if we flip over to the cross-asset picture, it is also a massive week for the bond market. A slew, as I say, of US economic data on the docket, not to mention the politics. Sanai Takaichi knocking it out of the park in Japan. The UK's Keir Starmer, though, hanging on for his political life. And as you can see here, we already have Treasury yields up across the curve, led by the long end, after China urged banks to curb their exposure to US government bonds. But let's dive into some of the single stocks that we're watching. Here's Abir Abu Omar.
Hi, Lizzie. Pretty staggering drop in Hims and Hers in the pre-market, down 15%. Now it's spared some of those losses, but this is essentially on the back of the news that came out over the weekend that Hims and Hers is no longer going to be pursuing the sale of its copycat Wegovy pill. And obviously, on the flip side of this, we had Novo Nordisk this morning at the European Open, the biggest gainer by points. It was up more than 8% in the morning as Hims and Hers said that it was no longer pursuing that, and also on the back of the FDA saying that it will crack down on copycat pills. The Eli Lilly story, another story in healthcare, but it's on the back of a different deal, $320 million that it will put in with a Chinese biotech company to create or to develop cancer research pills. Now, when you flip the board, we've got Kroger, and as you mentioned earlier, Lizzie, Kroger is up 1.2% in the pre-market today. That's on the back of a new CEO announcement, ex-Walmart executive. And then finally, we have ST Micro, that's on the back of news that came out, teaming up with Amazon to essentially, the deal that came out with Amazon was essentially a multi-year, multi-billion-dollar deal where Amazon received warrants to acquire as many as 24.8 million ordinary ST Micro shares, and ST Micro will be providing semiconductors and tech to AWS. Lizzie?
Okay, great stuff. Thank you so much. Now, let's get back to Japan. The yen gaining against the dollar after Prime Minister Takaichi's historic election win. We've got the perfect guest to discuss this. It's Jane Foley, of course, Head of FX Strategy at Rabobank. Morning, Jane.
Good morning.
So the yen actually strengthening this morning. Do you think that's going to last?
You know, I would agree with your previous Bloomberg journalist who said that we need to be careful here because, yes, we could have this re-emergence of weakness, but we've also got to really absorb the fact that there's lots of nuances here. This may not be quite so straightforward. Now, the first thing that we must sort of acknowledge is the market started off with this Takaichi trade, which is essentially this expectation that she was a fiscal dove, that she would spend lots of money, that they were worried even in case some of that wasn't funded, for instance, and also that she would pressure the Bank of Japan not to hike interest rates. Now, the latter has faded. The Bank of Japan has hiked interest rates at the end of last year. And actually, the Prime Minister has offered various reassurances about the fiscal position. So, for instance, when the Cabinet approved the budget, she said, look, it's not going to result in a lot of issuance of JGBs because the tax take is going to be stronger this year. And there's also added to that these other post-election nuances, which means that, you know, if we look at the election campaign, we know that the main opposition party was even more fiscally dovish than she was. And it's quite likely that some of the pledges, maybe with respect to the tax cut on food, for instance, was really in response to what the opposition was saying. But now that she's won the election, maybe she won't have to be as dovish as the market implies that she would.
And maybe she won't have to make it all happen as fast. Well, maybe she doesn't need to upset the market.
That's the other thing. She is very conscious about the bond market. And also, you know, within the LDP, there are a number of fiscal hawks. Notwithstanding, you know, the views of Ishiba, the previous Prime Minister, you know, she will have to sort of clear some of these points with them. So she's got the bond market on her shoulder. She's got some of the fiscal hawks on her shoulder. And she doesn't really have to sort of speak to the opposition in the same way that she had to. So I wonder if maybe we're not going to get these big shocks to the JGB market. But the other thing is that if there is more growth in Japan as a result of these policies, well, it's quite likely that the Bank of Japan may have to accelerate the pace of interest rate hikes. We might get perhaps one more, maybe than the market's pricing in, and that is something that could also soothe the yen. So this could go in a variety of different ways. I don't think it's as straightforward as perhaps the market assumed it would be, you know, when she won that leadership election back in October.
OK, so what's bigger for the Treasury market then? You've got Japanese politics, a load of US data coming out this week, delayed as it is because of the government shutdown, and then this Bloomberg scoop this morning that the Chinese officials are saying trim your Treasury holdings to banks in China.
Well, to be fair, they have been trimming them for a while anyway. You know, we know that. They're no longer, you know, the biggest owner of Treasuries. Japan is. And if we look at that data that came out a couple of weeks ago with respect to the holdings of Treasuries, and this is for November, this is the latest data we have, what we know is that actually holdings of Treasuries rose to a record high. And the buyers there, or the ones that increased their holdings, were the Japanese, they were the UK, Canada even, Belgium. Now, China did reduce those holdings. So assuming that it's only China perhaps reducing the holdings and there's still appetite for Treasuries from other parts of the world, well, that should be some solace for the US Treasuries. But of course they're going to be anxious about this sort of news.
And when it comes to that data, our economists say that it could show weak hiring and spending plus high inflation. Is that too pessimistic? If you got that situation, how would it leave the market?
Well, if we look at some of the activity data in the US, it really hasn't been that bad. You know, if we look at retail sales, for instance, if we look at consumption patterns, and we know, you know, from Trump's point of view, that that's not necessarily a broad-based recovery. We know that most of the strength in consumption, for instance, is amongst higher earners. We know that lower-income people are feeling the cost of living pressure. Now, that may not be coming out in the whole data, but they still have votes. So that is a concern, you know, from the election campaign for the Republicans ahead in the midterms. But actually, the activity data hasn't been so bad. Now, if we do have higher inflation, well, you know, the Fed has been saying, look, it could be just transient this year. You know, we'll have to wait and see. But, you know, the market is still anticipating, with a political edge on the Fed, that we'll still get 2, maybe 3 interest rate cuts this year. And I'm wondering if this data on its own will really change that view. So perhaps this data won't have the sort of impact that it might otherwise have.
OK, really interesting. Now, this is not the sort of environment that you want uncertainty in UK politics, right? We've been discussing with Rosa Prince Morgan McSweeney's resignation, Keir Starmer's chief of staff, or former chief of staff, of course. How much of a drop in sterling could we see if Starmer quits this week?
It depends who could take over. So, for instance, the market won't like it if the next leader of the Labour Party and therefore the next Prime Minister of the UK will come from the left wing of the Labour Party. If it comes from the more sort of Blair-esque part of the Labour Party, the market could show some relief. So again, it depends who that is going to be. So there's a lot to play for, I think, within the UK.
But of course, Keir Starmer presented himself as left-wing when he was trying to lead the party, and then, lo and behold, he ends up being a centrist. Do we just have to assume that of the likes of Andy Burnham when he says, I don't want to be in hock to the bond market?
Well, you know, I think the market would be wary about Burnham. I think they think he is going to be left. I think the market will be wary about... I mean, obviously, he probably can't stand in this Parliament anyway because he's not an MP, but going yet. But you know, the market will just generally be wary of the left wing, less so perhaps of Streeting. But then again, you could say, well, look, if you look at the Chancellor, what she has tried to do, for instance, if you look at welfare reform, has been rebuffed because of the amount of left-wing MPs within the Labour Party. So even if we were to get someone who wasn't from the left wing, you've got to try and work out, well, would they just come up with the same sort of problems because of the dominance of the left wing or the number of left-wing MPs anyway? So yes, we need the stability. It's not clear that even if we had a new Labour leader, that we would necessarily get that.
OK. Jane, thank you so much. That's Jane Foley of Rabobank. Now, to some other top stories trending on the terminal this morning. Apollo is teaming up with London-based Schroders to develop funds for wealth and pension clients. The firms will offer new investment products to wealthy investors in the UK. The first vehicle is set to be rolled out later this year. Elsewhere, Treasury Secretary Scott Bessent cited Chinese traders as a reason behind last week's wild swings in the gold market. Bessent was responding to a question about a record-breaking rally in precious metals on Fox News on Sunday.
The gold move, things have gotten a little unruly in China. They're having to tighten margin requirements. So the gold looks to me kind of like a classical speculative blow-off.
And in sports, Seattle Seahawks beat New England Patriots 29-13 to win the Super Bowl 60. This is the Seahawks' second Super Bowl win. Kenneth Walker became the first running back to be named MVP since Terrell Davis in 1998. Puerto Rican artist Bad Bunny made history as the first Latino and Spanish-speaking artist to headline the Super Bowl halftime show as a solo act. Well, coming up live from Cape Town at the African Mining Indaba, Ivanhoe Mines founder Robert Friedland joins us on the discussions around supplying the US with critical minerals. That conversation next. This is Bloomberg. This is Bloomberg Brief. I'm Lizzie Verdon in London. Now, Ivanhoe Mines has confirmed that it was in talks to supply critical minerals from its mine in Congo to the Trump administration's proposed $12 billion stockpile. Bloomberg's Jennifer Sabasaj is standing by in Cape Town with the company's founder. Jen, over to you.
Yeah, that's right, Lizzie. I am standing by with Robert Friedland, who is the co-chairman and also founder of Ivanhoe Mines. Robert Friedland. Robert, thanks so much for joining us. Lizzie was just mentioning you just came from Washington, did participate in that launch of Project Vault. What do you think this $12 billion stockpile will mean for the mining industry, not just in Africa, but more broadly?
It's good, very good news for the mining industry, Jennifer, because this is the beginning of a scaled vault to attract critical raw materials for the non-military side of the U.S. economy, so that major companies that are trying to build data centers or electrify the economy or build things or industrialize the country have access to critical raw materials. So it's part of the general understanding that we can't build a better, more modern world without the same materials that are being mined here in Africa.
Well, and that just leads me to your companies and some of the mining sites you have. Do you expect, or how do you expect your companies to be involved in this project?
We're going to help fill that vault. The mining industry is very happy that the United States government, led by US Bank and other arms of the United States government, recognize the need, and that $12 billion, which is roughly $2 billion of equity and $10 billion of long-term financing from Exim Bank, is scalable. And so it's really a very interesting scheme because it's market-driven. If General Motors Mary Barra was there.
Right.
She's the CEO. If she needs a particular metal, she can go to the vault, and the vault will go out and find it. So it's driven by market forces, and there's no reason why it can't be 48 billion or 72 billion and keep growing. And that's very good for the people that are here in Indaba.
How does that factor into supply disruptions that yourself and others experience, let's say perhaps in the DRC mine and other mines that you work with? How do you factor in some of those supply disruptions if you want to expand this vault over time?
Well, our job is to reduce those supply disruptions because we've gone from a perfectly integrated, just-in-time world economy to an economy that's balkanizing. It's breaking into little groups, and that creates a real problem for critical raw materials. It creates friction in the world economy. It's inherently inflationary, and illogical though it may be, each nation is worried about their own supply chain because everything you touch, we either grew it agriculturally or we mined it. And lately, those metals that we mine are absolutely critical to the world economy, and that's why they're called critical raw materials.
Right. Are you on track with some of your mines? Let's talk in the DRC in particular. Are you back on track after some of those disruptions?
Sure. We're still producing. We're one of the biggest copper mines in the world.
Yeah.
We have enormous prospects for continued expansion. We built the only modern copper smelter on this continent. It's the greenest copper smelter that's ever been built. It's a direct-to-blister smelter. It's very advanced technology. It's better than any smelter in the United States of America. We have hydroelectric power. We have very high-grade copper in the Congo. So the Congo will be a world leader. Currently, Congo's #2 in the world, coming up in the world ranking to Chile. But yesterday, Louis Watem, who's a brilliant Minister of Mines for the Democratic Republic of the Congo, warned the Chileans that Congo's coming for the Chileans to be the #1 copper producer in the world. And the rate of growth of copper production in the Congo is by far the fastest in the world. So that's very achievable.
Do you think the market then has caught up to the supply dynamics right now, or do you expect potentially we see prices go higher, in particular for copper?
I don't worry about prices. They will definitely fluctuate. That's the only thing we know about metals. But copper has a very bright future with 8 billion people on the planet, everybody wanting green, sustainable power, data centers, lots of national security related demand, lots of electrification demand, almost everything you touch, including these cameras and lights that are enabling us to broadcast this to the whole world. If you go to Bloomberg World Headquarters, it's copper, 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 very high tech. So most of the old known mines are gradually declining in grade. Most of the easy mines of the world have already been found, but there's tremendous exploration potential, in particular on the African continent, to supply world demand.
Is the capital there, though? Why is capital still sitting on the sidelines? What's needed?
There's plenty of capital. We've raised close to 50 billion United States dollars for mineral development. We've reached a strategic investor agreement with Qatar, they have plenty of capital. The Saudis are also interested in this. There's lots of developing countries that are providing capital. A very good project today, if it's high grade and can be developed in a responsible way, has no trouble at all attracting capital.
What is the risk, though, to your bullish outlook, not just on copper, but also the precious metals sector more broadly?
We like precious metals because they're precious. And sometimes you find precious metals associated with base metals. So we're mining zinc in the Congo, but it has a lot of silver associated with that. We frequently find gold associated with copper. And precious metals have been doing very well against the United States dollar. The United States dollar has been weakening against a lot of these hard assets. That's a process that could easily continue.
You believe that's going to continue?
If you lower the interest rates on fiat currency, if the Fed is in fact going to lower rates, then one could argue that these precious metals and base metals will do very well against the United States dollar. That's not something we worry about because we don't want to waste time doing that. We look for the highest quality ore bodies where they can be developed sustainably in partnership with local communities. And that latter element, the partnership with local communities, is what's essential to be a sustainable miner.
All right, we'll leave it there with you, Robert Friedland, Executive Co-Chairman of Ivanhoe Mines and also the founder, joining us here at Mining Indaba in Cape Town. Lizzie?
Jennifer, great stuff. Thank you so much. That's Bloomberg's Jennifer Zabasaja out of Cape Town. Well, let's take a quick look at some of the stocks we're watching this morning. US shares of Novo Nordisk and Eli Lilly both jumping in the pre-market after the telehealth firm Ivanhoe announced that it would stop selling a copycat version of Wegovy. Let's get more now with Sam Fazeli of Bloomberg Intelligence. So, Sam, we've had Novo really on the back foot. I wonder how much of a reprieve this is for the company.
I mean, it's a big one. So a couple of weeks ago, they said, and before the end of the year, they said that they expect the compounding environment to be stable. And they repeated it, and just before, as they were on the results day, they repeated that. The next day, Hims turned around and said, right, we've just launched a copy of the oral pill, which everybody went, including us, how?
What?
Because, yeah, exactly, this is protected by patents. And in that communication, they said, well, we've got our own manufacturing or method of making it or, product, which, of course, you can't because you would have had to do clinical trials with it. So the whole thing just seemed completely out of any norm that you would expect to see in the world of drugs and drug approval. So this is a big reprieve.
But there are so many other headwinds for Novo, right?
Yeah. I mean, it could be a bigger reprieve if they decide to also not continue with the injectable version. That's a lot easier. There was a period where they were allowed to because there was lack of supply. Then the FDA, I think, didn't do much when supply came back on and the compounders still carried on. So that would be a bigger possibility, a reprieve, for your want of a better phrase again, for Novo. And of course, they do have other headwinds, and those include the launch of an oral product from Lilly in the second quarter.
And does it actually show the FDA is sharpening its teeth now when it comes to knockoffs?
Well, yes. We were always wondering where they are with this rule, because you can't just go and make something somewhere and say, here we go, we've got a product. The whole point of the FDA is to be regulating efficacy and safety, particularly. And Hims' product had never been through any of those tests or looked at by the FDA. So I'm really glad to see this happening and the rule of law coming back in.
All right, Sam, thanks for the context. That's Bloomberg's Sam Fazeli. Well, coming up, we are going to talk retail, jobs and inflation data. All your week ahead coming up next. This is Bloomberg. Now a look at what's ahead this week. We are chock-a-block with data thanks to the government shutdown. So first up, we've got US retail sales coming on Tuesday. Then we have the delayed January payrolls report. That's on Wednesday. And then we wrap up the week with CPI on Friday. Taking a look at your micro movers, we have Novo Nordisk shares stateside gaining after Ivanhoe abandoned its Wegovy pill copycat, as we were just discussing with Sam Fazeli. We also have Kroger planning to appoint the ex-Walmart executive Greg Foran as CEO, up in the pre-market off the back, and ST Micro rising as well, as the chipmaker says it's expanding its partnership with Amazon's AWS through a multi-year, multi-billion US dollar agreement. Checking on your macro movers as well, we have US futures currently pointing south, so not following the risk-on mood that we've seen in the European and Asian sessions. The Bloomberg dollar spot index lower as well, and Treasury yields higher after we have seen yen strength and China urging banks to curb exposure to US government bonds. That's your Bloomberg Brief. Surveillance is next. This is Bloomberg.